There we go. We are live. I give everybody a second. Do some mic checks. We give everybody a couple minutes. Got a couple minutes. Stephen Kwitzel here. My other half and twin brother Ben Kwitzel is on the webinar with me today. Say hello, Ben.
Hey.
Hey.
What? Can everybody hear me? Okay. Is there any reverb? You just hit the chat box.
You sound good to me, but yeah, for all the people coming on, before we really get started, if y'all can just type in the chat box, you can hear me. Want to make sure that you guys get everything because we are going to drop a lot of knowledge today, a lot of really, really good stuff. So if you can hear me, that'd be great. Drop that in. So just kind of wait for a second. Let's cancel this for a second. Okay. And can you hear me? There's always a lag. Everybody, don't mind the fact that this slide is cut off. I have no idea why that happened. So let's just run with it. The title of this presentation is How to Use Options to Pull Weekly Income from the Market. Okay? It's what it's supposed to say. Okay,
I think I made too big of a photo on there, but it looked good on the slide deck.
Look good on the slide deck. That's all right. There's usually something that's off in the presentation, so it wouldn't be a good presentation unless something was a little bit off.
Well, I'm glad we got it out of the way on the first slide.
Yeah, it's kind of what I'm thinking. So
Phil, you can hear us okay? Excellent.
We'll give it probably another minute or so, and then I'll get started. Just I know some people are kind of coming in, but I want to be respectful of everyone's time. Probably going to hold off most of the questions till the end, but I promise you I will stay until every question is answered. Thank you, Bob. So I'll just kind of keep this going. My goal is to not go more than an hour. Maybe the FAQs part of the webinar could go just a little bit longer, but that's about what the training session is. So let's give it one more minute. Let everybody kind of pile in here. Again, Stephen Kwitzel with thetradersplan.com. My other half, Ben Kwitzel, my brother, is co-hosting this with me.
We could have added my picture. We look similar. Just you can picture me with like a much thicker, fuller goatee.
Yeah.
Is that it?
Yeah, I remember when you got the goatee, I made fun of you, and then 2 weeks later, I decided to rock the goatee, and I've had one ever since.
You couldn't live with that. I get it. I'm curious, where's everybody from? Does anybody want to tell me where they're from? I've always been curious, like what the if it's mostly folks in the U.S. or so you probably know a lot more of that, Steve. I'm curious though.
Yeah, and just
I want to see who traveled the farthest.
Yeah, who traveled the farthest? We're from Russellville, Arkansas. Nobody knows where that is, but it's in central Arkansas. It's a small town. California, Los Angeles, Florida, 80 east of Dallas. That's probably about 4 hours away from where we're at, Phil. East Lansing, Michigan. Ottawa, Dallas, another Dallas. All right. So we're going south. Then we got a Michigan and a Canadian. So I got some Northerners, Northern Cali. I actually drove through Northern Cali. Drove through the Redwoods and the Sequoia on my way from San Francisco on my way up to Seattle. Love that trip. No, I didn't, Bob. UCA is that's in Conway. That's about 40 miles up the road. We went to Arkansas Tech. That's the college in Russellville. But Conway is very close. I had another brother that went to UCA.
And our mother went to UCA.
And our mother went to UCA. I didn't even think about that.
I was gonna say.
Alabama. More Southerners. People in Alabama have more to cheer about from a sports side of things than in Arkansas, but we always have baseball.
Throw that in there.
Okay. All right, everybody, let's kind of rock and roll. We're about 3 minutes over, so I appreciate everybody, going through that, going through the mic check, telling me where you're at. Again, please excuse the slide. It is what it is. So this is me, Stephen Kowitzel, head publisher of thetradersplan.com, and my business partner and brother, Ben Kowitzel. He is on with me. We're going to be co-hosting this together. We're going to teach you my top performing strategy, right? How to use options to pull weekly income from the market. Now, this is similar to some of the other setups I've done, right? The weekly income system. However, we are going to update you, with what we have done year to date, and it's been phenomenal, by the way. You're going to want to see that. And we're going to add the options component because we've been silently, trading options behind the scene to see how it would have done, complementing with the stock alert. And we're going to show you how to do all of this, okay? I'm going to let Ben wrote this slide. I'm going to let him take over real quick. He's got some good stuff on this.
Yeah, so honestly, I've been working with Steve on the Traders Plan here since it started, but Steve's been trading since he was 14. I honestly remember when he bought our first vehicle, or his first vehicle, which I was part of, but with his trading profits. And oddly enough, like, I could never get into it. It just, we have very different mindsets, and it just wasn't for me. And even when we started the Traders Plan, I was not a trader. It just wasn't my thing. So about 5 years ago, I put a few $1,000s into I put my tax return into a Stash account. Stash is like a smaller Robinhood. It's just an app where basically I became the most stereotypical trader possible. I did all these things that would make Steven cringe. I read headlines. Like, I would see an expert pick and buy this, and next thing you know, I'd be in my trading account putting half or all of what was in there on a single pick. Because I'm the kind of guy I always wanted to play like the inside of the roulette wheel. Like, I wanted to see these massive returns, and I just get sucked in. I did that for a couple of years and honestly made no money. I think I made like $300 total over those couple of years. And then I really, kind of started getting into Steven's on the trading system. That took time too. Like, I would take his picks, but I wouldn't follow all the rules. And it was just this constant battle with myself. And I was always just looking for outcome. And that's why I said this income versus outcome trading. I was looking for these home runs or something, big that I could be proud of. And the reality was it wasn't working, even though I thought I kind of knew what I was doing. Like, I even would give picks to friends, and they were, terrible. I should never have been doing that. When I started following Steve's rules, and when I really got to the point where I followed all of them step by step, I was able to build something. And I do, have a business background. Like, I understand scaling. And that was one thing. I started my first goal when I got part of Steve, when I teamed up with Steve there, $100 a week. Not a big goal, didn't have a big account, but it was doable when I just stuck with the rules. And I don't know if you're, an advanced trader or a beginner trader, if you have these same challenges, but it didn't take me long when I started following all the rules and started scaling at $100 until I finally got to the point where my goal became $500 a week. It's doable if you follow something with a process. Other than that, you're just trying to get lucky. You're playing the roulette wheel. And I know, like, for us being twins, you'd think that was an easy thing for me. It really wasn't. It's still to this day. If I say something about a trade, Steve will, or something I like, something I want to do, he'll boil it down to rules and to a process to keep me in check. If you're trying to trade for income instead of outcome, you have to do this. If not, you hope to get lucky. And the reason I joined today is because I know that there's, I'm also part of the customer service. I read a lot of emails. I know that people still have a similar mindset that I did. It's very doable. You don't have to start being an expert and having started trading when you were 14. If you just can get these rules in place and they're really simple, you'll be good.
Yeah,
that's what I got.
Yeah, and I appreciate that, Ben. I think it's a perfect point. We'll move on here in a second, but I just kind of want to drive this home. Like, I'm looking to help individuals that were similar to Ben. Like, they wanted the home runs, they wanted the glamour, right? Everything looked hot online, but the reality is there's a big difference between those home runs and just being consistent. And if you follow a rules-based approach, that consistent income will come if you stick to the process. Just stick to the process. So we're going to walk through that process, and just to kind of add to that. So my big promise to you today is I'm going to give you 3 rules, right? I'm going to give you 3 rules that I have. I trade this every single week, this 3-step trading system. It should take you no more than 20 minutes a week, guys, to make you a successful trader, right? A complete rules-based approach. That means no discretion, completely objective. You know exactly what to do, exactly when to get out. Not only am I going to teach you the system, I'm going to give you the money management rules, and then I'm going to show you how you can really blow that up from an income side once you add some options and what we've done. So, lucky for me, every day I get to see traders and I get emails every day saying, hey, we've done a good job, or just whatever the case is. They get to put these plans into action daily. Okay, so real quick, got to make the lawyers happy, guys. If you can take 10 seconds to read this, and then we can move on to the meat and the potatoes. All right, lawyers happy. Okay, so I just want to make sure you're in the right place. This training is for you if you need an actionable trade plan to pull weekly retirement income from the market, or just weekly income from the market. Or maybe you've been consistently losing money even in the bull markets. Like, I get emails all the time like, Steven, like this market's going up and I just can't seem to I can't seem to make what the market is making, right? If you're still underperforming the market, even in bull markets, maybe you want to retire early. Maybe you're 45, 50, you're looking out 15 years and you're like, man, I need to do something that helps me grow on the upside and limit the downside. Or maybe if you just cannot afford to lose any more money trading, right? Like that's kind of when Ben hit his wall. Like, he wasn't really losing anything, but 2 years of kind of being a headline trader, he wasn't making anything either. And we want to put that consistent plan in place so you can grow and build and pull money out of the market. Okay, so a little bit about me. Most of you probably already know who I am, but a little bit about me. I am a former financial advisor turned trader publisher. I worked with a practice with 60 million assets under management. I'm the author of the Expert Trading Systems book, which was a highly ranked Kindle download, and the head publisher and founder of, I should say co-founder with Ben, of thetradersplan.com. Okay, so that's me, and enough about me. Okay, what makes this easy? I'm talking about a rules-based approach. You're going to hear me say the word rules-based over and over because I want you to understand really what we're trying to do here. There is zero fundamental analysis. Sales, earnings, PE ratios, none of that, okay? There are only 3 rules. You can literally write it on a Post-it note. 3 rules, write it on a Post-it note, you stick it to your screen. And this only takes 20 minutes per week. I don't like to be glued to my screen all day. I like to go fishing. I like to spend time with my family. I want to put 20 minutes a week, put my orders in place, and then voila, enjoy the rest of the day and the rest of the week, okay? That's what makes what I'm about to teach you very easy. Now, this is not for you if this is not for everybody. This is not for you if you cannot follow rules and really just choose to follow your gut, right? We're going to do the opposite of following your gut. We're going to follow a rules-based approach. I have evidence to back that over time, rules-based has outperformed my own gut. That's a different webinar, but or this is not for you if you kind of love that long shot gamble. Maybe you like to pick the inside of the roulette wheel. We're really looking for individuals that are ready to start being serious and turn this into a business, right? Treat it like a business. Or maybe you just can't come to terms with the fact that the market knows more than you, right? At the end of the day, the market is always right. It doesn't matter if you get stopped out, the market is always right, right? So want to get rid of revenge trading. We always use hard stops, right? And if you just have the idea that the market is always right, it will allow you to move on to the next trade if something doesn't work out. Okay. One more thing I forgot to write down. This is not for day traders. So if you're looking to get in and out, a couple times a day very quickly, this is a once a week setup. This is probably not going to fit your style of trading. So I wish you the best. Okay. Now, like I said, this is a once per week setup. So what I'm going to do is I'm going to teach you this setup, right? I'm going to go over the rules again with some recent trades. Okay. We're going to look at several examples. Then I'm going to add the option component to it. So I'm going to show you the trading system with the 3 rules that you can write on a Post-it note, and then we're going to add the option component to it, how you can make even more money, okay, with real live examples. So when studying the bottoms in stocks, I noticed that there are certain qualities they all have before they turn into winning trades. In order to identify this money-making setup, we must recognize these qualities before they make their big move. So lucky for you, I've narrowed down these qualities down to a rules-based winning system that I'm about to share with you. Now, how to set this up, right? I just want to kind of give you the big picture, right? This is very, very easy to do, what I'm about to teach you. I spend 15 minutes every Saturday or Sunday morning, going through my scans for the best setups. Monday morning, minute before the market once you have your selection, right before the market opens on Monday, you place your market order, and then just rinse and repeat, right? Set your alarm or your cell phone every Monday for the next day, and rinse and repeat. So it's very, very easy to do. 15 minutes worth of homework on the weekend. You buy at the market open on Monday, place your exits, and then voila, right? Go fishing. Okay. So I'm going to talk about the weekly income system. And right here, this is Eversource, and this is a real live example, real live trade. Now, I like to show this example, right here. So we are looking at this here. Let me put a pointer on this. We are looking at this signal bar right here, right? Because you can see that this is a swing low, and then the market just absolutely took off. Both you and I know that not every signal bar from this trading system is going to go on to double and triple. That's silly. But I like this example just to show you how powerful it is. And the lowest point on this chart is right where we would have entered. So I'm going to walk you through the rules on the next slide of how to identify this signal bar. That way you can catch the next big winner. Okay? All right. Here are the 3 rules right here. I told you could write it on a Post-it note. Okay, so I'm going to walk through the rules, and you can see, and this is Winnebago, and one reason why I use this example, and again, we're going to use more previous examples, but just to show you how many times you will see this pattern pop up over and over and over and over again. Okay, this is a weekly chart, so if you put up a weekly chart, you look back 2 years, you're going to start to see this signal bar at swing lows over and over again. So I'm going to walk you through it. Just because I'm going to focus on this signal bar right here, right? Just because it's kind of in the middle of the screen, it's easy to see. So let's just use this as an example, okay? Okay, rule number 1. Okay, so this green bar, keep in mind, this reversal bar, that's the signal bar, okay? So rule number 1, must undercut the previous 3 weeks. That means this low, this 23.47, which you might not be able to read, the low must undercut the previous 3 weeks. So 1, 2, 3, check. That's it. Okay. Rule number 2, must close above the previous week, right? All you got to tell is the bar green. Because if the bar is green, it closed above the previous week's close. Doesn't have to close above the previous week's high. It just has to close above the previous week's close. And if the bar is green, check number 2, right? I told you this was easy. Now, rule number 3, must have above average volume, right? You see these volume bars right here? See these volume bars right here? I'm going to talk about the psychology of all these rules. I'm going to go through them one more time, and I'm going to talk about the psychology behind it. But that is right there. That's your institutions. That's your pensions, your mutual funds, right? The smart money piling in. That's not you, me, or Ben just moving the market, okay? This is hundreds of billions of dollars piling into a stock. Now, as individual investors, we have the flexibility to move in and out of a position and just ride their coattail all the way up, okay? So big volume, that gives me conviction that the reversal will hold true and that the signal will work. So the bigger the volume, the better. Okay. So, and when I say above average volume, let me be clear. I just plot a 50-day moving average right here on this volume bar. If the bar is above it, that's above average to me. Okay. So let me walk through the rules one more time, and then we're going to look at a couple more examples, right? Because I want you to get this. So really, really pay attention. If you got your phone on, if you have the TV on in the background, you're not going to get this. Okay. So rule number one. Let's talk about psychology. The low of the signal bar must undercut the previous 3 weeks. 1, 2, 3. Why do I do that? Well, because I like all the stops. You know, you have some traders that have a stop right here and probably have stops all along the way. I want this wick just to flush out all the stops, all the weak holders. How many times, if you think about it this way, how many times has your stock been picked off and then the market just takes off without you? Happens all the time. Still happens to me, right? We can buy it back, but it still happens to me, right? So usually when the market frustrates you or picks off your stop, that's usually a good time to jump on the bandwagon, right? Because traders will pick you off. So that's the psychology behind that. I want to get rid of all the weak holders and only leave the institutions, the big money. They don't use little bitty stops. Okay. Rule number 2, must close above the previous week's close. I want the bar to be green. Now, why do I want to do that? Because I want there to be enough power in the reversal I want there to be enough power for it to, at least close positive, right? That's showing me that the bulls are in charge, okay? Very, very simple. Now, rule number 3, must have above average volume. You can kind of see this bar right here, kind of see these bars right here. Why do I do that? Again, as retail investors, we have the flexibility to get in and out however we want to, whenever we want to. Where a mutual fund, the typical mutual fund, it could take 2 to 5 months to accumulate a position. They can't take a $500,000 position in a stock, right, in one day, because it would move the market. They don't want to move the market, right? They want to slowly build their position. And why one hedge fund or 5 hedge funds are slowly building their position, we are just trend following it all the way up and then getting out what we need to get out, right? So again, that is really meant to hop on the coattail of the smart money, okay? Ben, did that make sense?
Yes, definitely. I mean, I've seen this before, but I think one of the biggest things that you just said that I struggle with was getting out. You might be covering this in one of the next slides, but exiting was one of my biggest things that I was not following when I was really struggling.
Yep. And that's 100%. And we're going to cover money management rules here in a second. But from what I understand, most people, they can understand these rules, but then they really do whatever they want to as far as exit strategies.
Mm-hmm.
And I've tested and traded different exit strategies, and I'll talk about that. Here's actually the rule set. So this is KBH Home. This is a real live example, one that we traded. So here are the money management rules, okay? So right here, you have a weekly reversal pattern, okay? Right there, okay? Got the reversal, right? It undercuts the previous 3 weeks, 1, 2, 3, check. Closes above the previous week's close, check, rule number 2. And above average volume, that's a massive volume spike, check. So here are the money management rules, and I'm also going to put this up on a slide. We enter at the open on the following week, right? So this is an end of week close. This is a weekly bar. We enter at the open on Monday, okay? Max stop loss of 10%, okay? So there's your stop loss, right? You immediately put your stop loss in. Now, the trend following rules are honestly really the secret sauce, right? You got to think about it. You need just a slight advantage in a couple different areas of your trading system, and all combined, they give you a big advantage over time. But one is the trend following rule. So what we do is when our trade hits 8%, we sell half immediately, okay? We sell half at 8%, and then we raise our stop to break even on our remaining shares. So we sell half at 8%, raise our stop to break even on the remaining shares. Now, why do I do that? Because now I'm playing with house money. So you sell half at 8%, you have the other half. What if that other half turns around and stops you at a break even? Then you still net 4% on the trade because you sell half at 8, you sell half at 0, you net 4, right? Still a nice little income trade, okay? But when we sell half, we're going to raise our stop, and because some stocks keep running, and then we're just going to ride the rest of the shares until it breaks the 50-day moving average. This is a weekly chart, so it's the 10-week, which is basically the same thing, except for on a weekly chart, okay? So we're booking partial profits. We're letting the trade become a free trade. And then, we're trend following it because some stocks just continue to run. And looking at all my trades in the last 2 years, there's not my biggest winners. I did not know they were going to be my biggest winners. Like, you just can't guess this. And I'm going to show you some examples here in a minute. Some stocks I thought would be losers ended up being big winners. So we just have mechanical rules. Take the emotions out. All stock trades get treated the same. Once you have your 3 rules in place, then you let your mechanical exit strategy take over, okay? This was actually this week's pick. This was the live pick, CLLS, okay? So this is a weekly reversal pattern, right? This is the signal bar right here, right? You can see the low of this undercut the previous 3 weeks. 1, 2, 3, just check, right? Closed above the previous week. Rule number 2, the bar is green. Check. So then, and in above average volume. Let me come down here. Above average volume, right? That is, even though there's some distribution, it doesn't have to be above the previous week. It just has to be above average volume, okay? So check. All 3 rules. We entered at the open on Monday, and that was actually this week. By Tuesday, by Tuesday morning, we already sold half at 8%. Raise our stop to break even on the remaining shares. So right now, this is this week's pick. We're sitting on a free trade. Where is it going to go from here? I don't know. It could go way up here, right? That's what I'm hoping it does. It's what it's looking like it will do. And this isn't a buy-sell recommendation. We already bought this, so I'm not telling you to go out and chase this stock, but I'm just showing you some of the most recent examples to show you kind of how powerful this is. And if you follow the rules to identify the system, if you follow the rules, the money management rules to exit it, you're going to do just fine, okay? So that is really in a nutshell. And I kind of want to go back a couple slides just to show you. I want to go back to this KB for home just for a second, just to show you how many winners you can potentially find. Like, you had 2 25% winners right here. Had a reversal right here. Had a reversal right here. I think this thing is in the way, but this was 131% gain from here. Pulled back, and then you get another reversal right at the swing low. Another move. This one failed. Well, it's just fair. They don't all win, right? No one bats 1,000. But then you had a massive reversal right here, and you can see this big reversal volume bar right here, and it just doubled, pulled back. You can add on, or you can continue to ride it. Another entry. So you will find these opportunities again and again and again. Okay. All right. So you can take a picture of this screenshot because I really want to make sure that you understand the money management rules. The money management rules are just as important as the system rules, right? On how to identify it. So again, this is a once a week pattern. We're not going to buy on Friday. We're not going to front run the signal. We're going to buy. We're going to wait till the week close. Going to make sure all the volume's there. Going to make sure it closes up, and then we're going to enter at the open on Monday. Stop loss max 10%, sell half at 8%, and once that happens, raise our stop to break even on the remaining shares, and then trail 1% behind the 50-day moving average, right? However long that lasts. Here in a minute, I'm going to show you a couple of examples of stocks that just keep going, right? And just because I want to show you how trend following really, really works. Okay, so can you do this? Right, this is just the stock side. We're about to add another angle to it. We're about to add the option side. Can you spend 15 minutes per weekend to find these setups, right? Where are these setups? I want to answer that because it's the #1 question I get answered. I think one of the best scans is an earnings gap up scan, or just kind of when you go through earnings scans, because a lot of times stocks will be in downtrends and all of a sudden it'll get an earnings report and boom, it will reverse. Or just basic above average volume scans. All brokers should have these predefined scans. It's very, very easy. You just go through a few, you find them. then you narrow it down by the best candidates. Okay, so can you 15 minutes a week? I think that's pretty fair. Can you place a market order before Monday at 9:30 a.m.? Pretty sure you can do that, right? Can you set up a bracket order? This is something that is a highly underutilized tool, and a bracket order really just allows you to, right after you get filled on your stock, say you buy Apple at 100, you can immediately turn around and put a stop loss at Apple at 90 and a price target at Apple at 110. So the stock, has orders on the upside and the downside. That is truly making it mechanical. That way you don't have to watch it. You don't even have to do anything. You just, whenever you get that email or that ding on your phone, is when you'll get your sell order. Hopefully it's on the upside.
Can I add to that real quick? So this is where I messed up. For the first 2 years, I didn't even use a stop loss at all. I know I was very green, and that at one point I burned like 25% of my account. And I know that sounds simple, but I also know there's a lot of people who are not doing that, and as well as the selling at 8% wasn't doing that either. So I wasn't following rules 2 or 3. And I should have known better, but I wasn't, and that was kind of one of the biggest game changers when Steve and I started looking at what I was doing together. He was like, "Put these in place, and you're going to be so much better off," and it did. So it might sound simple, but don't ignore it.
It is. You're in good company, I'll tell you that. It is the number one thing people don't do that could immediately improve their results. Just use a hard stop, right? Yeah, because absolutely. If you use a mental stop, then you can always talk yourself out of, well, we'll just see if it comes back by the end of the day, right?
That's what I did.
Yeah. And I've done it. Like, I'm there. Like, I've done it before plenty of times, but just not anymore. So with this trading system right here, it's the weekly income system, but it's the weekly reversal pattern. So I just wanted to show you the performance. I want to show you what we have done just to show you what is possible, okay? So I'm going to show you 2019 and 2020 performance, and then we're going to move on to options. So in 2019, it was a pretty good year in the market. I'll give it that. We had 38 Monday morning trades, Monday morning alerts, okay? 71% win ratio on those alerts. On average, I'm going to say about 1 per week or about 3 per month. Every now and then there's a week, right? Or maybe a month of March, like coronavirus, where I'm just like, the market is just not right, or I cannot find high quality setups. I focus on quality over quantity. If you want quantity, you should take up day trading, and I can't help you there. I focus on quality because my numbers speak for themselves, right? I want to treat your money like it is mine because I trade these too. So on average, the average trade is going to last about 2 to 4 weeks, okay? And you could have about 4 to 5 trades on at a time. So we stagger these. If we're buying 1 a week, some of them are going to run. Some of them are going to stop out, but you kind of ladder them in, right? So that way, when you ladder them in and you're buying 1 a week, you're pulling income from some just about every week, okay? Now, here's what I'm very, very proud of, and I'm actually very proud of my 2020 performance too. The average net gain per trade in 2019 was almost 6%. That's net gain. That's all the wins minus all the losses divided by 38, the number of trades, right? So that means in 2019, if you just would have taken this 38 batch of trades, you'd average almost 6% every time you hit the buy button, right? Win or lose, average 6% every time you hit the buy button because those trend following rules kick in. Now, we're in a recession right now. We have had a bear market, right? The market has rallied back, but let's see how it did in 2020. So 2020 so far, the last 22 trades, 14 winners are a 63% win ratio, almost 64. I'm going to be honest, right? I skipped March due to the coronavirus sell-off. When the market is locked limit down pre-market, I'm not going to send an alert out if the market's down 12%, So I didn't at all. I skipped March alerts due to the sell-off, and it paid well. So our average net gain per trade per year is a little over 6%. So out of the 22 trades, the average net gain per trade is, we'll just call it 6%, right? Round down, we round up the other one. So again, even though last year was a good year in the market, this year has not been a good year in the market. we have still averaged 6% per trade, mainly because of our trend following rules, and I have discretion to skip bear markets. All right, I tend to do that because, again, you know, cash is a position. Why trade when you know the odds are not in your favor, right? It's like, you know, spinning the wheel, betting on the inside. As Ben, I figured Ben would like that. Okay, but also here's something that's really interesting. If you'd have taken every trade, you take every trade year to date, all these 22, and you build a portfolio of 5 stocks, right? Meaning you're putting 20% of your account in each trade. Year to date, the portfolio would be up 20%, and the S&P 500 is down 2.5%. Right. So if you turn it into a portfolio style where you're really, really looking for growth and you can still pull income off this, we're beating the market year to date in the middle of a recession and, you know, just got out of a bear market by 22%. Okay. So this has done incredibly well. And this is, well, is awesome. Okay. So I always like to show my year to date numbers because that's what I would want to see. I'd want to see, hey, what have you done in 2020? It's been a wild year. There it is. There it is right there. And it's all inside the members area. Okay. Now, I want to talk about adding a different angle to this because behind the scenes, Ben and I, you know, we get asked about options all the time. Right? I know there are a lot of options traders out there that are looking for growth. They're looking for income, mostly income. But we have been behind the scenes, you know, launching an option service, kind of in the beta mode, if you want to call it, or kind of relaunching it. So here's all we're doing, right? Again, I like to put strategies in place that are replicatable for the average investor, for the average trader. So what I'm about to talk about is a very, very easy strategy. Anybody can do it, even if you don't know how to do options. I understand that some of you are going to be like, well, you could be more complicated and do this, this, and this. That's not what I'm trying to do. I'm trying to make it replicatable for the average investor, okay? So now we're going to talk about the option side. I showed you how well just the individual stocks have done on their own. Now, if we add just a little bit of leverage to it, you know, one contract, we're going to look at the rate of return. So in the last 4 months, we've been sending out options alerts that have gone along with the stock alerts as well, okay? So here's all we do. Very simple. We're going to look for liquid call options. We avoid the thin stocks or wide bid-ask spreads, okay? So, for example, the trade I sent out this week, the CLLS, that didn't get an option alert because the bid-ask was way too wide, okay? It just was. It was just way too wide. But most of them, we send them out. We are looking to buy one strike out of the money with approximately a 30-day expiration. Now, you can go 60 days, that's fine, but it's going to cost you a little bit more because you're buying more time, right? Our target for these options are in the 75 to 100% range. We do use a little bit of discretion just because of, you know, based on what the overall market is doing and the price of the option. And we have a hard stop on our options of 50%, right? So 50% hard stop on the option. This is our target. So we're looking for about a 2-to-1 risk reward on these options. But we're only looking to add one call option, okay? So here is just a quick screenshot of how to set this up, right? If you're looking to buy Apple, okay, you want one call option out the money. Look, we're going 30 days out, right? 7/24. We're going one call option out the money, and the bid ask. You know, here's the bid ask right here. So, you know, if you can get somewhere in the middle, let's just say this is probably a more expensive one. You know, you'd have paid $1,300 approximately for this option because there's 2 contracts, so that's why it's double. But, you know, most of them will not be that expensive because this is a high price stock. But I just wanted to show you like kind of how simple of an option strategy it is we're doing. Okay, so we're taking the trading system, we're adding one option component. So let's look at some examples. Let's see how we've done in the last 4 months, even in this volatile environment. Okay, so Cloudflare net, this is a real live trade. This was a trade where you had a weekly reversal pattern right here, right? You can see it clear as day, fulfills all the rules. Well, we were actually 2 weeks late to the party. I just decided, I found it late, but it was still around the original entry. So I entered at the stock and I entered the call. So we entered the calls at 240 and we sold the calls very, very quickly within a week at 430, okay? So, and we netted 79% on the option, but only netted 4% on the stock. The reason why we only netted 4% on the stocks because we sold half at 8%, raised our stop to break even according to money management rules, and then it turned around and stopped us out at break even, netting us 4%. But why we made, that much more on the, 20 times on the option that we did on the stock is because you only need about a 5 to 6% move, maybe 8, kind of in that range, 5 to 8% move, depending on the bid ask in the option to really hit your double, right? To really hit it very, very quickly. So that's exactly what we did. So, the stock did okay. Nice little swing trade, nice little income trade. The option did a lot better because you really just need a short move for that option to make money. Okay, so that's one example. Let's look at another. And I'm going to show you some other examples. I'm not just going to show you the perfect ones. I'm going to show you some that didn't work out too, because I think that's only fair. Here is Amazon. Okay, look, this was my first weekly reversal pattern I bought at the bottom of the coronavirus, right? And so far that's working out pretty good. I think the stock's around $2,700, maybe a little bit more. But what we did was we bought the stock at the weekly reversal pattern, bought it at the open on Monday, and we just added just one call contract, right, to this, okay? So Amazon stock is up 43%. And I think right here, we probably sold too early, right? This was obviously that's in hindsight, right? But the option still did 18%. You have to keep in mind the goal of just adding one call option to your stock is add a little bit more gains, okay? Just add a little bit more, all right? So this is one perfect example. Ben, is that making sense so far?
Oh, yes, absolutely. This one was Amazon?
Yep.
Yeah, I remember that. That one did go up quite a bit afterwards.
And I still own the stock, full disclosure.
Yeah.
I still own the stock. I don't own that anymore. I still own Amazon. But again, the goal is just to show you how we're taking this trading system, adding one call option, one very easy call option, and how you can make significantly more income from it, okay? Here is another one I still own, full disclosure, CrowdStrike, okay? So CrowdStrike, very, very simple, right? Weekly reversal pattern. Here is the signal bar. You can see it clear as day. This was coming off the bottom. It came up, created a nice little bull flag. Well, this was the weekly reversal. So I entered the stock in at $60, and then I entered one call option, right, at $4.50. So the option cost me $450, okay? Very simple. So within 2 weeks, right, we sold this call for a 60% gain, right? Now, most of the times, the option will actually be up more than the stock, but we had a couple cases where the stock just wouldn't stop, right? This is a perfect example of using trend following money management rules. We sold half at 8% on the stock side and let the rest run. It's still running, never got stopped out. Okay, so I still own this. I'm not telling you to go buy it. Again, throw the disclosure out there, but this is a perfect example of, with these options, we're looking to book an extra 50 to 100% within a couple weeks, very, very quickly. And then we can continue to let the stock run if it chooses to do so. Okay, so again, enter the stock at the normal price, at the normal system, and just add one call option, right? And then we have our price targets. Okay. Here's another example. And again, I don't like to pick all the winners. I don't like cherry pick. I want to show you some losers too. This was, in my opinion, a beautiful pattern, a beautiful weekly reversal pattern for the weekly income system. So right here, you have a nice reversal bar. You can see that it undercut all these weeks right here. Nice volume right here. Everything looked good, but it was a little extended, so I waited for a pullback. So we kind of bought the stock in the calls when it started to pull back. Okay, this is a weekly chart, but what actually happened is it pulled back and it found support. So we're like, okay, here's a great entry. And it just didn't work out for whatever reason, right? And what you can't see on this chart is it also broke out of a downtrend. I should have drawn a downtrend line. So it broke out of a downtrend as well. So everything on this setup, there is absolutely nothing I would have done differently. Nothing I would have done differently. It was a great setup. It just didn't work out. They don't all work out. So we entered the calls at the same time we entered the stock, but we entered the calls at 250, and then it just hit the 125 stop loss. Okay. So I kind of want to buy it back, to be honest with you, but that's another story. All right, so here's what the 2020 options trades have done. Okay, so in the last 4 months, we've done 12 trades, 7 winners, or a 58% win ratio. Again, I skipped March due to the coronavirus sell-off, but even with the 7 winners and 5 losers, right? The 58% win ratio, average net gain per trade of 15%. So that is literally 2.5 times what the average stock has done. So the average stock trade, income trade, has been 6% per trade, which is still solid by any standards. I mean, I think most people would take 6% every time they hit the buy button over the last year and a half. But so far, since we've really launched this, since we've relaunched it, it has averaged 15% net gain per trade. That's all the wins minus all the losses divided by the number of trades, right? So it's done very well. Now, I like to put this chart out because most of the people I work with, they are retirement income seekers, or they are looking to pull extra income from the market. So I said, okay, what if we take this performance, this exact real performance, what we've done in the last year and a half, going all the way back to the beginning of 2019, including this bear market, and said, okay, what would you have made on a weekly basis or even a monthly basis? We'll go to this monthly basis right here. If you would have taken every trade, followed it to the T, what would have been your monthly income? Okay, this is without the options. So your monthly income, $5,000 a trade, would have been $931, right? That's extra money, guys, right? I mean, what would you do with an extra almost $1,000 a month just by taking the stock trades? Now, here is what makes it really interesting. If you would have just added one option contract, I'm not telling you to buy 10 option contracts, and shoot for the moon, like a lot of people do. Get excited, they look for that home run, and Ben's laughing because he knows what I'm talking about.
Oops.
Yeah, it happens. Guys, I've done it before, right? But I'm past that. That's the old me, okay? But if you just would have taken one option contract and complemented it with your stock purchase, it would have added an extra $693 in extra income. $193 per month, right? So you can take this, would have been your monthly income on the stock side, and then add this, and that's what you would have done on the option side. So now if I sit here and say, okay, let me kind of move, let's see if I can move this out of the way. Maybe I can, maybe I can't. Ben, can you see that?
I can, but I do not have a clue how to move it.
I wonder if I can. That's all right. That's all right. So we can look at this chart right here. So this right here is, $5,000 per stock trade. The monthly income, over the last 18 months. This is what you would have pulled per month. If you just would have added one call option to go along with that, right? Look at how much more it would boost your monthly income. That is an extra 85% more when you add the options, right? All you have to do is add one call option. You follow the rules I just gave you. I just gave you all the rules, right? There's nothing I'm holding back. I just give you all the rules. And you go from $931 a month to $1,724 a month by adding one call option, 85% more. Which one would you rather have? Okay, I think the answer is clear, right? All right, so I hope I was really clear with that. And we talk about rules-based, and I always pound the table on this one. It is really designed to take the emotions out of trading, right? I believe in a rules-based system. And over the years, I have added more rules and more rules. But I try to keep it simple because I think it's incredibly important to have systems and work with customers that are replicatable, something that you can do on your own. So rules-based systems are really designed to give you more freedom. Not to mention the Wall Street guys use this. They use systems. They follow processes. They don't headline trade or do any of that, right? They are following technical analysis, rules-based approach. One thing that is very good following a rules-based system is because it keeps the drawdowns limited, right? I had a lot of rules in place that told me to stay out of the coronavirus sell-off, and I completely missed it, right? I'm cool with being in cash while the market drops 35% in 30 days. I'm fine with that. Okay, because I know what it felt like in 2008 to ride my portfolio all the way down. That wasn't fun. Right? Yeah, I was there. I was in money management when that happened. I can't tell you. I was sitting there on the phones, right, talking to clients, manage money. It was not a fun time. But it really allows trading. It's important to change your mindset to where trading should be a business and not a hobby. And once you put a trade plan in place, you follow the rules, it does become a business, and you get out of hobby mode, right? You get out of fun mode, right? I feel the same when I walk away from the computer, whether I make money or lose money, right? I call it the making a sandwich rule. This means you should be able to lose money and walk away and make a sandwich and just feel the same, right? Not have any kind of emotions at all. Because I used to have to do that to make myself feel better. Now I don't even care.
I think that most people, don't, because of the marketing that a lot of traders and a lot of these, big publishing companies put out there, makes it look different. But the reality is professional trading is grinding. They don't use 5.88% in the marketing typically, because that's not getting you to, to follow them along. But that's the reality of a professional trader. If you're trying to trade for income and you're knocking out 5%, you will be a professional trader. But a lot of people get sucked into the, I made, this 4x return, and it really like kind of messes. This is what happened to me. I kept looking at these big headlines and being like, well, I'm going to put every dollar I have on this, because if it goes up, this guy's so confident. Oh man, that was it. I was naive, and I didn't think there was anything sexy about 5% on a trade until you do it consistently and are able to scale it. Just, I'm sure there are a lot of professionals on this call. You had careers in something, you understand scale, you understand business. That's what this is. But if you get sucked into the headline trap of, quadruple, 10x your money and all that, like it's such a challenge, because professional trading is a grind. It really is. System based makes it doable.
And the headline guys, they tell you what stocks they like, but they don't tell you when to sell. They don't tell you when they're selling. There's no accountability. Like, what picks do you like? John Smith on CNBC or Kramer. Well, I like this, and I think Kramer's probably a little better than most, but most of them just tell you what they're buying. And then that's the end of it. They don't tell you when to sell. They don't tell you their profit targets or your stop losses or anything like that. There's no accountability. It's just to suck you in and to get you watched. At the end of the day, you got to make your own decisions, and you need to follow your rules-based approach. Okay? So these are a couple testimonials I got just the other day, right? Scott said, I sold half at 8%, have been rolling the remaining ever since, and he bought the option as well. So he said, currently up 198% on a closed position, in 220%, including current open position. Tremendous trade. So this is a perfect example why he bought the stock, he bought the option, he's doing the happy dance. Jim, and honestly, I like this email even a little bit more, even though this gives specific numbers. Here's what I like. Jim said, I've been slowly coming around to completely following your guidance, and am doing well as a result. I realize we are on a hot streak right now, but your basic principles are rock solid. I'm also making some outside buys. I call it Play-Doh, using your concepts. So far, so good. So when I read those two lines, I can literally hear the transition from doing whatever he wants to do, feeling whatever he wants to buy, to really following a rules-based approach. And that, nothing makes me feel better than when I see that. What's that, Ben?
I said that was me. And guys, I'm trying to answer some of these questions privately. We'll definitely try to knock those out in Q&A. I'm getting them. There's a few coming in. So
Oh, okay. Okay, and I will cover all those very shortly. We'll get to the end, and then I'll open it up for Q&A, and I'll stay here until every question is answered. Okay, just want to talk a little bit more. So Ben, I think were you going to cover this line?
I mean, it's just to reiterate, what I've been saying. If you're in a position like I was, or you just don't have a rules-based system in place, there are other rules-based systems. If if Steve and I aren't your cup of tea, totally get it. But whatever you're doing, like, make sure there is a measurable I like to use income based because I can understand that. I can understand how to scale income. But make sure you have a rules based system that you're getting a measurable result out of, and you're growing that. Because I swear, and you may already know this, but maybe you haven't come to terms with it. If you keep just throwing it out there, you know, at will, it really doesn't go anywhere, or it's only a matter of time before it really crashes on you. That happened to me early, luckily. So luckily my twin brother is really good at this rules-based system. But you can do this. Like, you can definitely do this. I like to follow alerts because even though it doesn't take long to set these up, I definitely just like to, push a few buttons and make it happen. So, I really follow the alerts close, but I follow them now. I don't kind of use discretion when I'm doing it. I don't avoid the stop losses or, booking half profits. Like, I was really bad about that. So if you're going to do this on your own, without any alerts or anything, that's cool. Just remember, don't ignore, especially rules 2 and 3. Don't ignore any of those rules. Just follow them, just like that last testimonial said. Like, it's so important to just stick with that, and you'll see real quick, how easy it is to build it from there. Even if we're talking about smaller gains, but we're talking about consistency, and sometimes they're huge. That's why I like options. I was able to get to my weekly target goal. Like, I've set whole new ones ever since we started doing options. So I'm excited about options.
Yeah.
That's it.
No, it's a new era.
Plan.
But I think you were trying to prove a point about, like, guys, there is no holy grail. There are a lot of great systems out there. Maybe we can help you. Maybe our system matches your personality. Maybe it doesn't. But I hope, you at the end of the day, you learn something from us, and that you say, okay, I'm going to start working on creating my own trade plan. And if you're not sure, I'd be happy to help you do that. I am looking for individuals to come join me. I love working with people. And helping them, create that trade plan and go along that journey. So, if you want me to do some of the heavy lifting for you, you can come join my weekly income system. And, I think we've already talked about the performance, but, going from January 1st to present, and that's, through the end of June, we have averaged 6% per trade, and that's just on the stock side. The last 4 months since we really rolled out the options, they've been averaging 15%. But, again, you've heard me say replicatable. This is designed to be replicatable, so you can follow it, feel comfortable with it. I want to teach you how to fish, and it's a very, very easy. So I'm looking for 20 individuals to join the weekly income system. So not only, and I talk about it in greater detail. So the weekly income system, there are additional training sessions that talk deeper into the psychology side of things, which I feel are very, very important. Maybe there are some things that you don't realize you're doing. So in addition, you're going to get the weekly income system real-time alerts. So I want you to learn this. I want to teach you how to fish, but while you're learning, every Monday morning before the market opens, I do my homework, and I'm going to say, hey, John, I'm going to send you an email out. Like last week, I like CLLS at the open. Profit target is 8% above the entry price, and we're going to use a 10% stop loss, right? And by Tuesday, we had sold that at half at 8%, razor stop to break even, and we're still in. So I send text alerts and I send email alerts before the market opens every Monday. That way you can be ready to go. I literally do all the heavy lifting for you. Now, I want to add a piece to this, because the weekly income system is really designed to pull weekly income out of the market, right? Whether you use stock, options, both, right? I give you all the data on that. But I have a long-term ETF trading system that has done incredibly well over time, right? So this is a bonus trading system. That's what I call System 2. But, this is for your long-term money. I'm sure most of you have mutual fund money or long-term ETF money. I'm going to show you how this right here can knock the living socks off of buy and hold. So in addition, not only am I going to give you the whole system, all the rules, I'm going to send out real-time alerts on that as well. So you're going to get a short-term system that we completely went over today, and I'm going to give you a brief overview of this bonus system, system number 2, which is really meant for long-term money. So this chart right here just goes to show you over time. This is going back, and this trading system, I have probably 60% of my money in it. Has been going back to 1999. If you would have started with $100,000, buy and hold, the SPY dividends reinvested, you would have $381,000. If you would have taken every single signal in this ETF trading system going all the way back to 1999, you'd almost have double, right? I mean, that's almost a double right there. So you would have done significantly better. But honestly, what I'm most proud of is look at this drop off in 2007, 2008, where the S&P 500 was down 55% peak to trough. And look at where we're at. We're flatline, we're in cash, we're fishing, we're not worrying about it, we're protecting our capital. I believe in drawdowns, and drawdowns matter, okay? So this is designed to have upside with very limited downside. So here is the actual numbers to put behind that. So buy and hold, going back from 1999 to the end of 2019, buy and hold, the S&P 500 is about 6.62%. So nothing to write home about, but I mean, you would have sat through 250% bear markets along the way. Max drawdown of 55%, that happened in 2007 and 2009. So that, I mean, really was hard. But you're exposed 100% of the time. If you would have started with 100,000, you'd be at 384. We already discussed that. If you would have followed this long-term trading system, your average rate of return over the last 20 years would have been 10.31%. So you're looking at almost 4 points per year more over the last 20 years. But honestly, what I'm proud about the most is look at your max drawdown. Your max drawdown is 12% over the last 20 years versus 55%. That's literally a fifth the risk, a fifth of the downside risk, okay? And so this is really winning by not losing and capturing the upside, okay? I have a lot of retirees that are like, look, I'm looking for something conservative to earn, 10 to 15% a year with limited drawdowns. This is an excellent choice. Usually, this has got about a 58% win ratio. So there've been 100 trades. It really means there's only 5 trades per year. But the interesting thing about this trading system is you're only in the market about a third of the time. So think about it. The market goes up a third, sideways a third, and down a third. This is really designed to be in the markets when the markets are going up. So I think there's no comparison. If you got some long-term money, some buy and hold money, which one is better? Okay. So the number one question I get asked about this ETF trading system is, Steven, can I just take your ETF signals and buy a leveraged version and shoot for the moon? Well, you most certainly can. And I had to run the data, and this is what you would have done. Now, the leveraged version, so we take signals off the NASDAQ and we buy the QQQ. The leveraged version is the TQQQ. I'll struggle when I say that, TQQQ. That's the 3X version. So this ETF is going back to 2010, so that's when I ran the data. Buy and hold the SPY, starting with $100,000, going back to 2010, you'd have $349,000. If you'd have taken every ETF trading system signal going back to 2010 and used the 3X version, you'd have $1,439,995. So you'd have about $1.1 million more in about 10 years, right? Now, obviously, I always say when you're talking about leverage, know thyself, okay? Because leverage is great on the upside, but it is a double-edged sword. So just kind of know thyself. So really, since the leveraged version has started, it's averaged about 30% a year. And since QQQ has started, which they're taking the same signals, this is just over different time frames, has averaged 10% per year. So, and honestly, if you want to go the 2X version, you're looking at about 20% per year on average, right? If you'd have taken every single signal. And by the way, every buy and sell alert is inside the members area. So I challenge you to do the work and go through that. Some people do, and I get impressed. This is just a testimonial from people inside my private Facebook group. You can see Greg. He could say my first trade paid for my subscription. He was pretty pumped. Jeff, he was too, and he did the leveraged version, as a lot of people do, right? So it has had a lot of success. Okay, so here's what you're going to get. I'm going to break down everything for you. So you're going to get the weekly income system for all the videos, system number 1 plus the alerts. You're going to get the ETF trading system, the bonus, system number 2. This is the long-term system, plus the alerts. Huge value, guys. Really a lot of value between these two systems. But in addition, maybe you like to trade a little bit more. every Tuesday before the market opens, I send my top stocks video. So I send out my top stocks video as where I walk through our portfolio, and then I walk through about 5 or 6 new setups with potential entries and exits. So if you're looking to put more money to work, this is an excellent short actionable list that you can trade off of, and most people do. I send that out every Tuesday morning. So in addition, we've been talking about options, and I taught you the options. I taught you exactly what we do. It's very simple. It's very replicatable. But I'm going to add options alerts on both systems for the first 20 members. So you can get options alerts on both systems for the first 20 members. If that's something that you want, I would go ahead and take advantage of that. And just to kind of show you, what one call option can do. I think this is a perfect example. A stock made 4%, the option made 20 times that, right? Made almost 80%. So, with the option, we are looking to book profits much quicker. Okay. Just to kind of be clear, so I send out the stock alerts before the market opens. Usually what happens is, since you can't get option data pre-market, we wait till about 8:35, 8:40 to let kind of that option pricing come in, and then we choose the option alert and send that out. And that comes from my buddy Matt. So you'll get an email from me on the stock alert right after the market opens. You'll get the option alert from Matt to complement it, so that way you can buy them both. So kind of recap, system 1 and system 2 plus alerts, the weekly setups video, that kind of my top 10, top 5 setups, and then 12 months worth of options on both systems. Huge value, guys, $6,182. This absolutely comes with everything included. So if all this did was just kind of give you that additional retirement income we were talking about, right? That's $1,700 a month. Would that be worth it? Or what if it just financed a few trips on your bucket list every year? Maybe you're not traveling overseas right now, but maybe you want to go buy a camper. Would that be worth it? What if it just allowed you to retire more comfortably than you and your family thought was possible, right? Would that be worth it? I think it would. So right now, just $597, you get everything we discussed, and that's the annual income package for the weekly income system plus the bonus system. You can go to thetradersplan.com/checkout-NTS. However, I know these are uncertain times, right? So I wanted to make this a no-brainer for you. So if you go ahead and enroll today, I'm going to offer a buy 1 year, get 1 year free. So that means $597. You can, instead of having a 12-month subscription, it will be a 24-month subscription, right, for the first 24 months. So literally, I mean, that's $597 covers 12 months. That's the best offer I have made. You can go down here to the checkout, tradersplan.com/checkout-NTS. We'll open it up for it. Let me drop that offer real quick. Let me publish that so you can have a clickable link right there. I just dropped that in the chat box. And now I'm also going to drop a link to that as well in the chat box right there. So you can go in the chat box. And we can kind of go from there. So there's the offer, guys. I could start to go through some FAQ, but real quick, again, I talk about uncertain times. So here's my offer on a 2-part guarantee. Trade it for 30 days. Trade it for 30 days. And if it's not for you, just simply request a full refund. I only ask that you prove that you've taken 1 trade. Just send me a snapshot, right? I don't want you to stick your toe in the water. Just take a trade. If it's not for you, send me an email, Steven@thetradersplan.com, and it's a no-hassle refund, okay? But I understand that most people don't want their money back, right? They want a trade plan, right? They want it to turn into a business. They want to be successful. So here's my other guarantee. If you haven't tripled your investment in 90 days, I will personally mentor you one-on-one until you do. So triple your investment means, if it's a $597 investment, it means if you haven't made $1,800 or $1,794, I'd like to show this just to show you what is possible. This is absolutely what we have done over the last 18 months, including a bear market. So if you just want to trade the stocks, that's totally fine. You would have made $931 a month. If you want to add 1 option contract per trade, you're adding an extra $800. So you're looking at about $1,700 per month right there, about $1,750, somewhere in there. my math is correct. So it's you know, some people are trading here, some people are trading here, some people are trading way over here. That's really up to you. I'm not, you know, I don't know where everybody's at, but I try to make a reasonable assessment right here. And keep in mind that this portfolio, if you would put 20% into each trade, you'd be sitting at about a 20% gain year to date versus a negative. You're probably at about negative 3% right now for the overall S&P 500. So it's done incredibly well, and that's not even including adding the options. Okay, so go ahead.
So you're saying nobody's going to be a millionaire by next month by taking these picks, but this is a progressive system. This is something to grow income. I mean, $1,700 might not sound like, maybe it does. I don't know where you're at, but you know, I've seen a lot of the marketing that offers crazy returns, and you know, being a million, retiring tomorrow. This is more of a plan. This is more of a business plan, which I hope, you know, as professionals or retired professionals, you can appreciate the reality of this.
Yeah, these are real numbers. I think
verifiable inside.
Yeah, these are 100% real numbers on what we've done. If you would have been with us, these are real numbers, right? So yeah, I'm a math guy. I don't do fluff, right? I say, hey, you know, if you want to be consistent, if you're on this webinar, you've probably had some frustration over the years, right? You're probably tired of the ups and downs, and you want something that's consistent, right? These are the real numbers over the last 18 months with everything that's gone on. So $1,700, $1,800 a month, that sounds reasonable to you. Obviously, you can trade more and make more. You know, full disclosure, I have no idea what the next 18 months will look like, but I can tell you we've navigated a pretty crazy bear market. So, and I have some pretty good stocks right now, and I have some pretty good picks coming up. So, you know, there's no way to predict, but I like this system. I've been trading this system for 3 years. I continue to find ways to add more rules just to make it easier to follow and easier to replicate. So again, guys, buy 1 year, get 1 year free. You can look at the top of the order form. If you go to that, I've dropped in the checkout. You can look at the top of the order form, and it will say buy 1 year, get 1 year free completely. Okay. So I will completely add that myself. It will be automatic, but if you feel comfortable, feel free to email me and I'll say, yes, you do have the extra year. But this is only available for the first 20 as long with the options. I'm seeing some orders come through. That's great, guys. I'm looking forward to working with you. But if that's something, if you're on the fence, go ahead and check it out, right? You can also email me at Steven. I'm going to drop this to at thetradersplan.com. Kind of need, you know, is this for me type of questions, and I'd be happy to send it. Okay, so let's go through some of these questions, and I'm going to start from the top. Do you send ETF alerts as well? I missed that part. Yes, I do. For System 2, you get not only the system, all the rules, right? You get the ETF alerts as well, right? Right now we're sitting on a massive winner. Avery. Click reconnect at the top of the screen. I'm not sure what you mean by that, Avery. Okay, got it. Okay, so Denny asked, okay, I'm gonna answer that. Denny sent me a private message. I'll ask that. Kathy said, thanks, Ben. That's pretty nice. Ben is a pretty nice guy. Steven says, is Keys a weekly reversal last week? I don't have my charts pulled up, but I can in just a second. Let me see if I can pull that up real quick for you. It sure does look like it. Yeah, let me pull that up. Let me kind of answer that. It's Keys. So you're looking at Keys. Is that the technology? Yep, Keysight. Okay. Yes, it is. Keys is a weekly reversal last week. You are correct. It's looking pretty ugly this week, to be honest with you, but it is a valid reversal, Stephen. What rules help you stay out of the market. Okay. So honestly, Jay asked, send me privately, but I'm going to say this: what rules help you stay out of the market? I call it a waterfall, right? When the market is in a waterfall mode, means it just shoots down, 2 to 3% every day for 2 to 3 days in a row. Then I'm just going to kind of back off for a second because something is going on, and typically those waterfalls can be anywhere from 10 to 20%. So when I see a waterfall, I kind of step away for a second, and it just so happened that waterfall lasted 30 days and it was minus 35%. So I hope that answers your question. I could maybe send me an email and I can try to explain a little better. But I have rules in place, and honestly, Jay, I use a lot of the market timing rules from system number 2. Which system number 2, the ETF system, that tells me when to stay out of the market, right? When I should be incredibly cautious, which is included in this. Could you expand on, Phil asked, could you expand on the option selection? Yep, one strike out the money, 30-day expiration. Man, it's really that simple. So we're just looking for one strike out the money, 30-day expiration. And just the only other rule is we don't trade thin options. We want there to be plenty of liquidity. So if there's a wide bid-ask spread, we just kind of stay away from those, which unfortunately I had to this week, even though the stock alert was a winner. But I will take a winner either way. Okay, so trader said, I don't understand the option contract. I explained it the best I can. Maybe you can email me at steven@thetradersplan.com if you have any other questions, Eric. On the open after the signal bar. Jay, we do buy the option on the open after the signal bar on the following Monday. On an open off, Schwab treats stop losses the same way. I'm not sure, Avery, on your Schwab question on options. Avery broker is a little bit different. Kathy asks, what is the average time in the trade? Are you talking? So the average stock trade can last 2 to 4 weeks. So we'll just say 3 weeks. The average option trade, we're looking for something much quicker. So it's usually in the 1 to 2 week range, because once you get the closer you get to 30 days, that option starts to decay. Okay. Do we have any other questions? Okay. Kathy asked, do the TQQQ options alerts come with the ETF alert as well, and the option alerts on the stock? Yes and yes. Okay. I think we actually send the option alerts on the QQQ, the non-leveraged version. But so I think sometimes he does complement that with the leverage version as well. All read Gene on Tuesday. Is there a discount price? Gene, send me an email on that question.
We've got a few of those. Gene, Brad, there's a few members on here who are asking, about getting the options. Since this is set up like with this checkout page, send Steven at the Traders Plan, a direct email. We'll figure out what you're in now and, come up with the best way to get options to you as well.
Yeah.
We'll be fair about it. We have to do it separately.
Yeah. That way I can look at your plan. Thank you, Ben. That way I can look at your plan if you're already a member. Got a lot of people that are already members. Hey guys, it's great.
Yeah, that was to try to cover that.
Yeah, no problem. Absolutely no problem. Okay, do we have any other questions? Again, guys, I'm going to drop the link one more time. You go to thetradersplane.com/checkout-NTS. You can see it on the form right there. Buy 1 year, get 1 year free, plus the first 20 get options. So I am, see, Kathy, you're in. Awesome. I see your order coming through, as long with several others. So I'm happy to have you. Looking forward to working with you. Anybody has any other questions? I think you guys know how to reach me. I wish everybody the best of luck, and let me know if you have any questions, and I'll see you on the inside. Ben, are you good? Do you have anything else to add?
Yeah, I'm really looking forward to working with these guys. It's awesome.
All right.
Yeah, thanks for having me on, man. I had fun.
Okay, I had fun too. Thanks, Ben. Thanks, everybody.